It's now down to the execution of that plan that I think is raising some questions everywhere, because they're saying, well, it's obvious, isn't it? If you had a 7% deficit and you want a 3% deficit, you're taking 4% of spending out of the economy. Well, that's got to be bad, isn't it? And of course, so everyone's, oh, that's bad. I said that in November, no one cared. But, now they're saying, oh, it's really bad. Well, maybe.
Holy fucking shit, it's a dinosaur! Jesus Christ, what the fuck? Welcome, ladies and gentlemen. I got the lady right this time.
Very good.
To another issue for the Grey Market Talk. It's almost March, and I'm sitting here with my good friend Nick to get some guidance. What's about to happen? Today is the day after the Nvidia earnings, which looked okay, but the guidance could be any better. It's always the same, yeah. For the last, I don't know, 4, 5, 6 earnings, we always said, oh, the market is dependent on what Nvidia does, and then the market does what it wants to do anyway, yeah, rotates around. So my first question for you, Nick, it looks all a bit nervous what we see here at the moment. Bitcoin is getting screwed. The first memes are coming around from Sailor working at McDonald's and stuff like that. They were actually hilarious. So we have a Bitcoin wobbly, we have gold with a lot of conspiracy theories floating around. What's the S&P? What's the yield market? What's the bond market? What are yields going to do? Can you give me an overview how you see the world at the moment?
Okay, we had a video in November, right? And this was when Trump, was elected, even though it was more probable that he was likely to be elected. But what we knew at the time was that the policies of the new administration would be totally different to the old administration, from war, from spending, from all of this stuff, interest rates. It has people really qualified for the job, market practitioners in the team. And it really looked like a dream team. But when you turn policy around 180 degrees, you don't know what the impact is. And in November already, I was saying, I'm nervous. And I think I said 5,200, and everyone threw stones at me, for being so stupid. And then, I modified it later on. So, okay, maybe we can get away with 5,600. But the bottom line is we were going to test somewhere below where we were. But of course, after Trump got elected, market went up. Everyone got excited, he's going to do this, he's going to do that. But still, we don't know the effect. So tariffs, we don't know. Is there a trade war? Is there not a trade war? What's the impact going to be on the consumer? What's the impact going to be on corporates? I mean, you already see yesterday, Microsoft came out and said, oh, by the way, Mr. Trump, can you lighten up on those chip export stuff? Because, it's problematic for us. And so we honestly don't know what effect these policies are going to be, at least in the short term. Things may settle down, but in the short term, when you've got a market which was priced to perfection up until the end of last year, at the time that Trump got elected, there's no room for uncertainty. So what else has happened? So we hear also Apple suddenly announcing that they're going to be spending 500 billion into the economy. Where are they going to get that from? Certainly not from the money that they were looking forward to for share buybacks. Yep. So what's the impact on the stock price going forward? How do we build all of this in? And then, of course, Scott Bessent, the Treasury Secretary, said, well, actually, Janet Yellen didn't do such a great job on, allocating the debt. So we're going to be terming out the debt. So everyone thought, well, that means term premium, risk premiums for treasuries need to go up. So yield started to shoot higher because of this expectation that suddenly we were going to move from issuing a lot of T-bills to issuing a lot of 10 years, and adding duration into the market is not, it's not helpful to the market. Put it this way: increases volatility. When you increase volatility, then you reduce the value of collateral. When you reduce the value of collateral, then you reduce liquidity. And we know that liquidity is good for the market. So, and then of course he announced his quarterly refunding statement, his first one, and he basically said, I ain't going to change anything. So suddenly everyone was like, well, hang on a minute. I thought you were going to term out the debt. And he said, no, 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 no. We're going to leave things as they are right now. And why are we going to leave things as they are? He made clear in an interview with Bloomberg recently, where he said, well, actually, you know, we need to term out debt probably, but I certainly don't want to do it whilst the Fed are doing QT, quantitative tightening. So I don't want to be working against the Fed at the same time I'm selling stuff whilst they're not buying stuff. And so, you know, people then say, oh, okay, then maybe you're just going to stick to a lot of T-bills and go like Janet Yellen. And then he supported this statement by saying, but by the way, we're going to focus on lower 10-year yields. So even more reason for yields to go down after he adjusted and modified his policy. But then the Fed minutes just came out, and the Fed say, well, actually, we've got a 8.5-year duration. Treasury's got a 5.5-year duration on their assets. We want to match the two. What does that mean? That means the Treasury need to sell a lot of, add more duration into the market. That adds again volatility. So you can see all of these things that are going. I've only just spoken about half of it. I mean, there's a lot more going on. This creates this wobble. Okay, so that's exactly what we've had since November. And so we've explored the breakout, yeah, and we've explored a little bit the downside. We've only really once had a go at the downside. And there are some other things to talk about. You mentioned about Bitcoin, and you haven't spoken about gold yet. I know you want to talk about gold, but you know, think about what you know, what's going on with the new policies. So in November, I said, well, you know, if you reduce the deficit, actually, that was, you know, irrelevant that you sort of spent the money on, you know, lots of corruption, lots of unnecessary wars, and all of this stuff. It was money going into the system. So you have said you want to reduce the deficit. Well, hang on a minute. So if you want to reduce the deficit, again, that was money that was supporting the economy. So again, this is sort of negative for the economy. So for all of those people who priced the stock market to perfection, there's a reason to be nervous. And then, of course, with the tariff policy, you say, well, of course, tariff policy, but ultimately we want to weaken the dollar. Well, so all of the foreign investors who invested in Nvidia and Apple and all of this stuff suddenly say, well, hang on a minute, if the dollar's going to go down, then what are we doing holding all of this stuff? So you've seen already an outperformance of Germany and overseas markets as these investors who've been heavily invested over there are now coming over back home. It's the whole market's getting this readjustment. And I was going to talk about Bitcoin. So what was Bitcoin all about? And what was gold all about before Trump got elected? So the original thing was we buy gold, we buy Bitcoin for monetary hedge. So why do we need a monetary hedge? Because the government are spending a shed load of money each year. You know, it's going like that. And there's no political will to change this thing. Therefore, the only thing that you need to do is to buy monetary hedges, because the only people that can fund this stuff is the Fed. And therefore, they're just going to print, and the government are just going to, you know, spend money, and the Fed are going to support it by doing QE. And, you know, therefore, the value of your dollar is going to go down, and therefore you need Bitcoin and gold. Well, let's think about that. So if they're now saying that they are going to do something about the deficits, so there's a big question mark now about monetary hedge. Just how much depreciation of the dollar are you going to see versus stuff as opposed to other currencies if your deficits are actually slowing down, or even Trump says he wants to eliminate the deficits? So there's a big question mark about why you want to hold gold, why you want to hold Bitcoin. Is it now use case, or what is it? You know, and I say that all of these things that I've just brought up in, I don't know, 5 minutes, 10 minutes, those are the things that every investor up until November, whenever it was, when Trump was signed and sealed, didn't have to think about before. Now they've got to think about them. And that's why we get this sort of, and I don't know. And it could do a little bit of that, or it could do a little bit of that. And, we have to see how the authorities are now going to respond. And, there's been some release of the TGA account. So the Treasury General account has been reduced. That means somebody's putting, you call it plunge protection, but somebody's putting liquidity into the system, probably to calm things down until they got their story straight. And so this is why we have a little bit of volatility. There is no certainty here. And if anyone comes out and says, you need to do this, I'd say, run a mile. They don't know what they're talking about. It's a guess. We're all guessing. We don't know. Is tariff going to happen? Is it not going to happen? Are they going to be able to reduce the deficits? If they do reduce the deficits, and of course that's sort of very deflationary, is that going to be made up from private sector increasing borrowing, so extra credit in the system, so to compensate? We don't know. What we do know is lots of uncertainty. We don't like uncertainty. Positions down.
So I would see that almost, and I'm interpreting you deliberately wrong here, but it looks to me like a bloody trading range we've established. We have all these points you just made. Yeah? I would put a split between gold and Bitcoin. Gold still necessary. Bitcoin, people think, yeah, well, I might not need it. Yeah, that would be an explanation while Salinger has hired up at McDonald's. But reducing of the deficit, where are we? 37 trillion US dollars. What is actually the only way to reduce that? We spoke about that. Revalue gold, put it on your balance sheet. Suddenly you have a couple, 5, 6, 7 trillion or wherever you choose the price there. And people would say, oh, America doesn't have the deficit. It actually really has. That's very good. Bond yields will go down. Dollar will go down. Everything the administration would like to have, if I interpret them right.
So can I say something?
Yeah.
The revalue of gold. Let's talk about that. There was a sort of a journalist event in the White House, in the room, in the Oval Office. Scott Bessent and what's his name? Our friend from Cantos on the other side. And what were they doing at the time? They were basically signing the Sovereign Wealth Fund, right? So the Sovereign Wealth Fund was about, and then Trump said, well, I'm going to let Scott sort of explain all of this. So Howard Lutnick, how can I forget that name? So Howard was there, and Scott Bessent was there.
One quick question. A wealth fund, shouldn't you have wealth to have a sovereign wealth fund?
Well, here's the question, right? So where do you get the wealth from? So I think there were a few journalists asking questions, and Trump said, well, he's going to answer. So Scott Bessent was like, it was cool. Well, I thought a little bit by surprise. He was like, I don't bloody know. It was his idea. So everyone was thinking, what's he going to say? So Scott Bessent said, well, we're going to monetize the asset side of the balance sheet. It's all very well everyone focusing on, the 37, 35, whatever the number is, trillion of deficit. But you know what? We got some stuff as well. We're not so bad as an economy. And what have we got? And of course, he didn't say it's about gold, it's about land, he didn't say anything. I think what he was referring to was the mineral wealth of the economy, the land of in America, probably the fact that if they get Greenland as well, they won't have to worry about sourcing rare earths from China. Well, anyway, so the market, the day one after that thing, so gold revaluation, right? So all the YouTubers, gold revaluation.
Hey, I had a video with Murad about that.
Right. It's obvious. Yeah. What else? You wouldn't think of anything else because he didn't say. He never made it clear. And in fact, 2 weeks ago, 10 days ago, maybe something like this, he was being interviewed by Bloomberg, and the Bloomberg journalist said, "Oh, by the way, you said you're going." He said, "No, I didn't. That's not what I meant." And it was, well, what did you mean then? And he didn't clarify. And so the journalist then said, so you're not going to revalue gold? And he just said, that's not what I meant. So, you know, not only do we have all of these questions that I brought up 10 minutes ago about what's going on, but the chance for the guy to be a little bit transparent about the thought process about the sovereign wealth fund and what it means, he didn't take the opportunity to clarify any further, probably for good reason. But I would say the investors out there were basically saying, well, hang on a minute, mate. You got to give us some clue. If we keep guessing, we're going to guess wrong. And that just means it's going to go down. So you don't want that. So you better tell us what is going on, because I don't think they can be this intransparent. It's the wrong word, because Musk is saying he's so transparent. But I would say there's a lot of uncertainty in what they're doing right now. And for that reason, you have to keep things very tight, whatever you do, in my view.
Oh, you gave me a segue. Tight. So it sounds to me like there's a Gordian knot somewhere, yeah? And we're waiting now for the Alexander stroke to get this thing apart. What could that be? What gives market certainty? I don't even care in which direction, yeah? If everything is being hunky-dory again, great. If everything falls to pieces, not great, but at least we know what we're doing. So we have this situation. Nobody knows what the administration is doing. They do revalue gold. They don't. I don't know. I had one idea to say, we have this fantastic concept, goodwill. Usually it's being written down, yeah, when, I don't know, Yahoo takes over AOL, and suddenly you could put a positive goodwill on US military, on pretty much everything, and say, hey, look, our balance looks great. All our hardware used to be worth, I don't know, $1 trillion. Now it's worth 15 trillion because we are rescuing the world. So bookkeeping tricks, there are many aboard. But there's me sitting in front of the screen thinking, okay, what am I going to do? I just see how the market trades at the moment. We have huge amplitudes. Then somebody, you mentioned them, the plunge protection team comes in, and people start trading again 21, 50, and 200-day moving averages. That's actually a bit intellectually not really challenging, but you see it happening on the screen.
Guilty. Because,
yeah,
you can't be, you try and be intelligent on this thing. And in
no,
the
I've
end,
stopped.
it comes down to,
I've
you know,
stopped. I pointed out to a couple of my students, said, you know what? I don't know. I'm talking for the same stuff. I'm trying to analyze everything. Look at the chart. Look at the moving averages. Look where they stop. Look where people are trading it. Because we have given all our ideas, news flow, stories into the market. There's nothing new come in there. The Trump administration obviously could add on new ideas and stories. But so far, it's just innuendo what's going on. So what would be the point which gives us certainty? Is it the GDP, preliminary GDP figures this week, or CPI?
no,
Or
we need I think the Germans call it rote Faden. We need the path. And in fact, the plan was well outlined by Stephen Mirren, who's the chairman of the economic advisors in Trump's team. And he wrote a paper called A User's Guide to Tariffs and Trade, or something or other, in October or November. There's a YouTube video with him explaining it. And, broadly, it kind of makes sense. He's saying, well, it's been unfair for a long time, all of this trade. America's sort of got the sort of the bad part of it. We've lost all of our production. It's gone overseas. So, we want ultimately a fair trading system, and that's ultimately what they do want. But it's the path to that fair trading system that is really the uncertainty about it. So if you put tariffs on China or Germany or whoever you're going to put tariffs on, well, somebody's going to try and loosen their currency. Well, hang on a minute. Chinese currency getting weaker isn't going to weaken the dollar against Chinese currency. So you are doing something that causes them to do the opposite of what you want them to do. And then they're saying, well, you know what? It doesn't matter, because if they do that, they still have to pay the tax, the tariff, or somebody has to. I mean, that's the importer who actually pays it in the end. But so the Treasury get a lot of money. And the other thing that they're trying to do with their policies is effectively, and I think this is really an interesting thing, and this is where potentially gold comes in, also for Germany, by the way, is to get these people to actually say, well, China has been a net seller of treasuries. Russia hasn't held US government bonds, fortunately for them, since I think 2014. They did unfortunately buy European bonds, and they don't see them anymore. But so they need these people back. They need them to fund the deficits, because you will strangle the economy if you force people to fund the government, right? Because if they're funding the government, they're not putting money into either stocks or into the real economy. So you need foreign money into the US. So part of the plan is to say, well, Germany, you needed some sort of protection, of course, in Europe. If you want our help, right, go and buy a 100-year bond from us, zero coupon 100-year bond, and we'll help you. And so, whether that's good for Germany or not is a different thing. But this quid pro quo, in order to encourage again foreign central banks into the US, I think is a good thing. And so you ask, what do we need to see? It's not the GDP number. You need to see the plan, really, to say, well, actually, this takes us one step closer to our ultimate goal. And the investors need to be sort of with it and understanding why they are holding, Palantir at, X hundred times sales. Because they say, okay, we can see the plan coming through. And if they don't understand it, then they'll look at their Palantir and say, the hell am I doing with this thing? Get rid of that. And so you need that sort of explanation, and say that's that part of the plan. That's the bit that we're trying to sort of achieve. And I think they don't want to say the plan fully because they're still negotiating. They don't want to give their game away.
I had an idea. The Japanese model. You mentioned that over our, I don't know, 100 shows in the past, that Japan owns itself, yeah? Debt here, assets there. They can just put them together and their 200% deficit has disappeared.
Yes.
Could you use this wealth fund? Let's say you revalue gold. Out of 1 trillion becomes 10 trillion. Yeah? You just write any price you'd like to put on top of it. Then you leverage it up, factor 5, factor 10. Yeah? Suddenly you have, I don't know, 50 trillion lying there. And then you say, this sovereign wealth fund buys US treasuries in there. Oh, secured through our own gold. Then you don't need all the bloody foreigners anymore. You buy, and you can make an inspired domestic, how do the North Koreans call it, yuhe policy. You own yourself, you feed yourself, you have your industry in-house, you have isolationism. That's what everybody's afraid of, what Trump really wants, to say, yeah, you do your stuff and we focus solely on America. That could be a solution. I want to be invested in a country like that.
Well, before we get to the point of, let's revalue gold to $20,000 and we'll be fine, you have probably created a financial panic in the entire system. And then I'm not sure that's necessarily the right thing to do, but you do have gold, and the Germans have gold. In fact, the Germans are probably the second largest holder of gold in the world. And they're all scratching their heads about, well, we need to spend some money to get our economy going. And then there's this whole political debate about some kind of debt break. We're not allowed to sort of borrow above a certain amount. But you've got a load of shiny stuff, in that cupboard over there. And I discussed this week actually, and everyone's still looking at me as if I was an idiot. But the Germans could do this. The Germans could actually borrow on what they have in their cupboard. They could have $1 trillion worth, or it's not going to be trillion, probably something like $500 billion or thereabouts of dollars worth, but enough for the German economy to start to rebuild its technological edge. I remember Vorsprung durch Technik when I was coming over here as my first years, and, it doesn't exist anymore. But, there are tools that you just need people to think outside the box without saying, oh, let's revalue gold to $20,000. I don't think that's necessary. I think, it's fine if you have a sovereign wealth fund and you say, okay, well, actually, yeah, we've got got a trillion of gold, so maybe that's going to be in the fund, or maybe that gold is going to be used to encourage China to go and buy some 100-year Treasury bond at zero coupon, but we'll back it with gold. All right. So there's your collateral. It stays here. So you better be a good boy for the next 100 years, and you buy treasuries, and this solves other problems. But of course, the sovereign wealth fund is needed, and they need to raise money for this sovereign wealth fund because the Americans got a different problem. They need infrastructure. They don't have infrastructure that's working. You have train crashes and plane crashes and all sorts of stuff going on over there that you wouldn't believe as the sort of leader of the free world, as it were. So they need to build reserves for themselves. At the moment, they have no such thing. And I think they want to separate out this pot and get it funded probably by foreign central banks. I've no idea. But they need the money for building that infrastructure. You can't bring production into the States, put a great big factory there, and then suddenly you try and drive the stuff out the shop, and you say, well, where's the road? Or where's the train line? Well, we don't have that yet. We just got the factory here. So they've got to build all of this stuff if they want to build production. How they do it, maybe that's what the sovereign fund is doing, but that's what the Germans should be doing. And the Germans shouldn't be wasting that money on war stuff. They should be investing it on technology.
It wouldn't help in Germany. We have the biggest tax code in the world in Germany. And the German way would be, oh yeah, let's spend some money, but first start a new bureaucracy, hire 10,000 people.
I know exactly what you mean. The moment the Germans revalue gold, there's going to be a team of 50 people analyzing this. You're going to get all of the consultants advising, and they'll spend half the money before they've even got it going. I understand totally, but with the right guy, he could just say, you lot back off. I'm looking after this, and I will decide how it's going to be. But I think there is a path for Germany, but I think they need to think about this. And I think this comes from the Americans at the end of the day, because the Americans have said government is too big. So we could save an awful lot of money that would be good for the people. The problem that the Americans are facing right now is we don't know what effect that's going to have on the economy. But in the meantime, I think they're on the right path. And I think the Germans need to take some lessons from this. And the idea of gold would be a good one. So I'm sure if the current finance minister pops that idea up, maybe he'll keep his job. You never know.
Mr. Debelius.
No, cookies.
Cookies, of course. Debelius, the other guy. Mr. Cookies, yes. Well,
I mean, he's a Goldman's guy. The clue is in the name.
Well, they at least know what they're doing, right? Well, they at least know how they can make money. Let's put it that way, right? And if that isn't the right direction, let's come back to the United States. So we are now in this scenario, and I'm sitting here. I think, yes, there should be volatility. But volatility is suppressed. We don't see huge volatility in the markets. Every time it lifts its ugly head below the long-time average, there's somebody selling the crap out of it brutally. Always falls down to 15. That's what, in my head, doesn't go together. I'm following you with your scenario analysis, what's going on at the moment. The market needs guidance. We don't really know what's about to happen. There should be far more volatility in markets.
I agree. And it's not happening. And, if I was Scott Besson and Stephen Mirren watching all of this, I'd be saying, right, whatever you do, the S&P doesn't go below 5,500. Release the TGA, get some money into the system. I don't care what you do until we've got our story a little bit more cooked, until Trump has signed this peace thing in Ukraine, so we can get the oil premium, the war premium down on oil. So we can actually sort of, again, help this inflationary pressure that we want to have. We don't want to have this inflation being on the agenda with what we're trying to do. So there's many things I think they want to secure before they become, how should we say, a little bit more obvious about what the next step is. And I think, there is a level.
That is
where
my
they're saying,
that is my theory. That's happening for the last 18 to 24 months already, because what they've discovered, you want to stabilize a market. Where do you start? Do you buy treasuries? Do you buy corporate bonds? Do you buy stocks in Nvidia, Apple, and I don't know, Costco? Or do you simply say, how do markets taking options into consideration now actually work? The moment I depress volatility, because all option dealers in the world seem to have the same book. Yeah? I know what I'm talking about. It's always I'm the call short and I'm calls long and short, put shorts. So when volatility falls, that leads inevitably always into this, we call it a Vanna rally. You don't have to buy all the individual stocks. It's just this huge option market tells every market maker and dealer in the world volatility is going down. My hedges is buying. I'm buying the shit. That's why I think we always have this. We're going at 20, barely ever over 25. But who is doing that? Is that the usual suspect? Is that one phone call secretly at JP Morgan? Can you do that for us? We're not looking too deep in your books, because at the end of the day, a future is a future. We've seen that in gold now, coming back to gold. Uh, Nobody really cares about whether you deliver or not. With VIX futures, even better. You can't even deliver volatility. So it's just
yeah,
in your accounting.
yeah, I don't know about the who the suppressors are, but I guess the brains at least are in your Council of Economic Advisors. They're the smart people. So that's going to be Stephen Mirren, Scott Besson will be around the table and making sure that the economy, doesn't have any flash crash, for God's sakes, whilst these people are still negotiating. The last thing Trump needs right now is a domestic problem whilst he's trying to sort the shit out overseas. So his order to Besson and Mirren is, keep this stuff going. I don't want any problems, and I think he means it. So there won't be any problems probably.
Unfortunately, that always seems to happen to conservative presidents. There was a chart going around. I'm looking at it right now. Herbert Hoover, when he came in, 1928, Great Depression. Richard Nixon, 1973, new all-time highs before that, market down by 50%. George W. Bush, 2008, great financial crisis. Now we have the new Orange Hope, and he might fall into the trap because markets seem to perfectly or always perform very nice under Democrats because the crash happened beforehand.
Because they spend money. Yeah, I mean
Yeah.
they print and spend. I mean, look at what Labour have been effectively doing in the UK, and that's the policy. And it's kind of, they do their best for growth, but it's not sustainable growth. At least, I think the Republicans try to do it properly, but of course you can't do it properly because there's just too much corruption, I think,
So
in the
at the
past.
end of the day, are our communist friends right? Yeah, we're all communists now. John Prescott, I think, was it in the UK. Just keep spending it and don't worry about the future.
The late John Prescott, yeah,
Yeah.
that's probably true.
We're all
But
socialists now. I think that was the line.
no, I think the problem with it, and you see the problem with it, is that you get this sort of the Wall Street and Main Street sort of discussion about Wall Street doing exceptionally well and Main Street, struggling. And I think, there's a clear intent from Trump to make sure that the balance, at least, between the stock market and the real economy is narrowed. And I don't think his intention is to reduce, the wealth of the shareholders. I think his mission is to make sure the real economy picks up. And he's starting also with fentanyl, yeah, which is part of the thing. You see these sort of zombies walking around these towns, and he's trying to do something about that. So I think that's his intent. So all the right things, but actually the implementation now, what we're seeing is we just don't know whether something breaks along the way. Because ultimately, again, let's look at the positives. What are the things? The other thing that Scott Bessent said in the Bloomberg interview, I mean, he didn't say what was going on with gold or anything like this, but he did say, oh, by the way, I just came back from meetings and, it seems that we're on the cusp of some implementation of artificial intelligence and the benefits will, run through the economy. I mean, it's sending a story of hope to everybody
Yeah.
that things will be good. And the other side is, of course, I think they just signed something in Congress, which basically allowed Trump to have 2 trillion of tax cuts, but he's going to fund that with 2 trillion of savings in the Medicare. So, you know, that's good for the stock market, isn't it? I mean, if the companies pay less tax.
That they were talking about these checks they would send out, and that personally, good, I'm not an American, but that personally insulted me because the line was, yeah, we could send out $5,000 to every citizen. And I thought,
No, that was a different thing. No, that
yeah,
would be, but you're right. I understand that. That was
no,
a,
because I thought, send it out to me. I'm the taxpayer. Don't send it out to everybody. They haven't paid taxes. Yeah? Send it out to the guys who were skimmed for years and years and years. Don't just spread it, then you're almost in socialism again. Yeah? You get
yeah,
my drift.
I think that was Musk having what can I do? You know, I mean, I'm trying to do a good job here, and I'm doing a good job, and then suddenly they're all throwing stones at me. What can I do? I'll tell you what. I'll give you 5 grand. I'm saving 100. I'll give you 5. You know,
Doesn't
Trump,
it
isn't that a
sound
good idea?
doesn't it sound like the bros from the pub are running a whole country?
Well, I must say
Nice
there are
bros, yeah. They're all
some
funny
things.
and have enjoy what they're doing, but it's the bros. The bros have now a country and do what they always wanted to do.
There are some things that are being done on the fly, which obviously don't come across very thought through. You know, this is not the Mar-a-Lago plan.
Yeah.
Let's give everyone 5 grand. The intention was to reduce corporate taxes, but to find the money somewhere else in the system. And so, you know, their intention, I think that what Congress just signed, is theoretically really good for US corporates, not the Apples of this world. They don't pay any tax anyway, but
Right.
you know, the other corporates, you know, you get a corporate tax deduction. You know, the valuation means a lot for valuation. So there's an underlying support there for stocks, you know, looking for the positives here. And then they're going to take the money from, you know, what they deem to be wasted spending in the medical sector. So somebody's going to lose out, obviously, but in the end, Trump's just signed something which is, you know, stocks positive.
But now we're getting somewhere. Yeah. When I say AI, they have discovered for it can reduce costs, bureaucracy to a magnificent degree. They want to reduce taxes. It's good for corporations. We have the starting wobbles you've seen in Argentina, which Milei had, and then the stock market at 90% a year later. That would be for me the knife or the scissors which could cut this cord. If people get their head around and say, no, actually, overall, on a big base, what's happening here sounds good to me. It justifies big valuations we have because they can get even higher. The corporates will eventually deliver the earnings to justify what we're having, and we don't have how many times of sales is Palantir?
Yeah, I mean, I lost count. I mean, it's a silly number. It's more than my age, and that's really old. So I would just simply say the plan or the goal is exceptional, right? So for the American, if you're an American, I think you would look at a plan and say, well, that's really exceptional. It's now down to the execution of that plan that I think is raising some questions everywhere, because they're saying, well, it's obvious, isn't it? If you had a 7% deficit and you want a 3% deficit, you're taking 4% of spending out of the economy. Well, that's got to be bad, isn't it? And of course, so everyone's, oh, that's bad. You know, I said that in November, no one cared. But, you know, now they're saying, oh, it's really bad. Well, maybe there's something compensating coming. Maybe Trump has left it to the point of announcing tax cuts because he understands that it's bad. Well, we don't know yet. So we are watching this execution. It's not an execution, the execution of policy, not an execution of anything else, but the execution of his policy. We're watching it from a distance. We don't know all of the insights. I don't think these people are stupid. I think these are really clever people. So, but what I'm seeing is there's something not quite sort of right in the information that I've got that would suggest that, oh yeah, don't worry about it. Hold your Palantir. You should be okay, mate. Because you know it's all going up. And at the moment, I don't feel the same confidence.
Think about it. They could go for the big one. Take all this gold, do revaluation, put it in the sovereign wealth fund, leverage that up, and then go out and say, by the way, we've abolished the inland revenue. No taxes for you anymore.
Yeah, as I say,
The outgoings we will finance in the meantime till the economy is caught up through our sovereign wealth fund and tariffs we have there, and you be free again,
it's
America.
not so easy to leverage up gold because somebody has to, sign that off. But you don't need to leverage up gold, in my view.
You just call the Treasury and say, by the
It's
way, I need 10 trillion in shiny dollar bills.
Yeah, I
Bye.
understand that, but the sort of the effect on the dollar and the effect on inflation and all of this stuff is not something that they would do. They would certainly consider adding an extra half a trillion or a trillion, whatever it is, by revaluing gold to the current price, because then they can issue actually they don't need to, they can just issue a 30-year, 100-year bond backed by gold without changing the price. I mean, collateral is over there. It doesn't matter what we have it in our books. You're going to get a lot of, you're going to get trillion inflow, but they want to get it from China. They don't want to get it from JP Morgan. They want to get it from China. They want to get it from Germany. They need international investment back into the US in order to compensate them for everything that they're doing really with the dollar. If you tell everyone that the dollar's going to sink, who's going to fund your deficit? So they've got to be very careful about it. The intention is good to, tax the consumer, but give their production a great advantage. But along the way, you could break something. So that's why they need to do this thing. There's so many deals that they need to do in the background. I wish them well, but I've got to say I'm pretty nervous.
They could come in with, that instrument, reverse convertibles, very popular 25 years ago, which was simply, they say, okay, we issue bonds and we redeem you either in US dollars or in grams of gold in there.
Yeah, I mean, I'm sure the Goldman's guys will be advising them of what they can be doing. But as I say, I think the plan is good. We just have to hope that all of these deals that they need in the background are going to work without any problems. But it does create nervousness in the market, and of course you see it with Bitcoin. Bitcoin is the bellwether, is your canary in the coal mine for what is the mood of the risk on community. She said, I don't really know. I mean, market's going up and down, but let me have a look at Bitcoin. And Bitcoin is the thing which is effectively saying to you, market's a little bit nervous right now. No, nobody cares about Bitcoin, whether it's at 0, whether it's 100, but, because nobody's going to lose their job other than Michael Saylor. But the point being, it is the bellwether of that risk barometer, your risk fear and greed index, Mark II, a super duper fear and risk index. And it's basically saying there's a lot of fear out there for what is going on in policy at the end of the day, and how that's going to impact everyone.
Is that for Bitcoin blood in the streets at the moment?
Well, look, I
or
mean,
just a little bleeding?
I would say that I've not got to the point, at least where I'm looking at this thing, where I'm particularly bothered. And I sold a lot of crypto when Bitcoin effectively was above 100, sold really a lot of stuff. And I've started to pick some things up again. Now, I might get flattened by a steamroller, but it doesn't matter because, I'm just trying to sort of replace some stuff at the end of the day. But I don't think that that's where the story ends for Bitcoin, because Howard Lutnick, who we've just spoken about, who is at the right hand of Donald Trump, or the left hand of Donald Trump. He is the not the Treasury Secretary, but he's the Secretary of Commerce, I think it is.
Commerce, yeah.
Yes, and he was there signing together with Scott Bessent, together with Donald Trump, and this guy owns hundreds of billions, probably, of crypto, Bitcoin, what do you call it? These stable coins and so on. He is in this game, and there's no way that he's going to just say, oh, fuck it, house money. This is serious money. So, and I think there is a clear path for crypto in the US. And what role Bitcoin plays in that, is still unclear. Bitcoin reserve, not reserve, use cases from, the PayPals of this world or Apple and so on, allowing you to put sort of this stuff on a wallet, on a phone, making this thing so transportable across the entire economy. This thing, there is a good story for a lot of these cryptos, but right now, nobody's looking at that. They're all just saying uncertainty. What can I sell? I've got a good idea. Let's sell some Bitcoin because actually I can now go short IBIT. I can now buy some puts on IBIT. Before, if you didn't have the Bitcoin, you couldn't sell this stuff. So
You mentioned IBIT. Before our conversation, I looked into it because since I had this interview with Achim Illner, who's a complete Bitcoin bull, uh, I never had really the instruments to trade Bitcoin properly. Then I looked into IBIT and I thought, bloody hell, awesome. Huge volatility in there. And that's the interesting bit. Huge volatility you can monetize, especially you have a
absolutely,
good idea about
absolutely.
Bitcoin. Since I said that, volatility is falling off a cliff. So a lot of people are playing this, which is interesting because as high volatility also almost induces markets to have huge swings. Falling volatility also takes huge upside and downside potential out of the market in there.
Yes,
And
that's true.
so, as I said, I'm following that closer. But let me do a shameless plug for you here, because I will also put a timestamp in. That's why I took a note a moment ago. You are making more and more short videos, 20 minutes, about interesting stuff that's happening in the market, applying your special skill set in analysis. I've seen over the last couple of weeks, you had something on NVIDIA, you had something on Apple. 20-minute videos on your channel. I put the link in here, so I can just recommend to all our viewers, if you want to have the short and snappy bit and not two old dudes just talking about the markets, to find a trade out, go on Nick's channel, have a look at the videos, the last videos you had on Apple and NVIDIA. And I want to close down this conversation. I want to get one or two trades out of it. What am I going to do in Apple and what am I going to do in NVIDIA, Nick?
Well, you asked me the real dodgy names, didn't you? But so I've played both sides with Apple. Yesterday, I closed a short on Apple. I didn't have a play on NVIDIA. I on Microsoft. What did I do? I think we're close to Microsoft. I thought there was a triangle. It still could be a triangle. It's just a different level. So there is a point here on Microsoft where I'm looking to buy. I haven't jumped into it. Tesla, yesterday I took a small bite, immediately got hit by a truck, but it's there now where I got in. So that one is probably a bit premature. You do need some confirmation that this thing is turning around. So there is evidence of some positive stuff in some of these names. On Apple, I still say that unless we break this 250 level, I really don't want to be long. I don't see the bull case, and especially if Tim Apple, as Trump calls him, has to spend 500 billion into the, do you remember, into the economy. Where's the money coming from? I mean, he can't invest it in Apple or shareholders or whatever. So I think there might be a macro thing on Apple that people do need to reconsider where this money is coming from. But yeah, I mean, these potential trades on these sort of Mag 7s, I'm having a look at them because I want to put a roadmap out there, and then the roadmap changes when price action changes, and to keep people up to date with these names. But ultimately, what it's there for is to guide for the rest of the market. So there'll be some interesting off-piste names that you'll see along the way. But I thought it's important to not just talk about S&P, and we do that all the time. I'm bored with the S&P. I haven't had I had sort of two American stocks in my portfolio. I'm invested in China and gold and crypto. I mean, that's my portfolio. And why? Because this stupid S&P is doing nothing now. But actually, when you look under the surface, there's a lot of stuff, some going up a lot, some going down a lot. And I think, this is where we need to be right now. Whatever the S&P does, whatever its path is, I'd say underlying there are some great opportunities. And I think we spoke about that with the equity risk premium. The value of bonds versus stocks right now is a big question mark when you just look at the S&P. But the S&P is an average. Underneath there are 500 names you really need to look at, and I say that people like you and me should be taking advantage of that and spread the word.
Well, the first thing already with Apple, what I'm going to do is I'm sniffing around a trade where I would like to sell some upside volatility, especially for that point. If volatility is good, sell a call spread, yeah, then you have to find risk, or just sell some calls if you're more of the adventurous nature. That's, by the way, no recommendation here. It's what I'm doing. Yeah, to say, fine, I have a look at it, and with the S&P, I'm with you. If I look at certain levels in the option markets again, we have established a trading range, not a tight one, narrow one, but there is a trading range at the moment until the market gives us more indication which direction we want to go. That can happen tomorrow, that can happen in 3 months. In the meantime, why not ride a little bit, especially when we have these little volatility spikes, vol goes up to 20, sell some, yeah, because the plunge protection
Indeed.
team is there and sending it back down again until we have a direction. Where can it hurt you? On the downside, when volatility gets out of hand. On the
Sure.
upside, not really. Nobody is getting the S&P market maker put short in the market. That's not going to happen.
I mean,
But
I just had a look on IBIT, by the way, and I mean, we talked about this before after your talk with Achim, and you showed me about IBIT and the volatility and stuff, and I said, well, I'm actually looking to replace some crypto. So when I'm ready, I'm going to do it through IBIT, and that's what I did yesterday. I actually sold some puts. The vol is about 100. I mean, it's crazy. You get paid for this stuff. So
yeah, but you're an animal. You went into the very short term option series, yeah, where you have the skew. But for somebody who has an opinion and who has even holdings in there, yeah, I love it. Yeah? People like Achim, there are so plentiful opportunities to say, yes, I have this pot of gold here. I was an early investor. I'm very, very clever. In the meantime, now I can milk this whole thing, and I don't have to do it with some Northern Korean dodgy partner. What happened over the last couple of years, now you can do it in IBIT. This thing tracks the Bitcoin almost perfectly. You have a tiny management fee, 0.25%. And we looked at the assets under management. It's almost as big as the TLT or GLD. Yeah?
Yeah,
Where did
indeed.
that come from? Unbelievable.
Yeah, I think people who are lucky to have portfolios, whether it's of crypto, so IBIT or
Yeah.
stocks even, Palantirs of this world. I think there is a way to kind of monetize whilst, if you're a stubborn holder of something, then at least earn some money along the way. And I think the likes of these instruments give you that opportunity. And I think you've got the know-how to explain to people how exactly to do that. So I shall be knocking on your door once I get the rest of this stuff.
I shall be delighted, especially that actually helps me, as I'm still the person who is totally agnostic on Bitcoin. Yeah, I'm just purely looking at the option markets and trying to figure out, is there something there when you can get a little edge out of it. If people
Absolutely.
with opinions can come, you can do a lot of stuff like you can do, yeah. But that's the interesting point also. Nvidia and Bitcoin, now at least in the IBIT, they have the same volatility patterns levels in there. So it doesn't really matter anymore if you're an early investor in Nvidia or if you're an early investor in Bitcoin. You have the instruments to do something in the meantime with it. Very interesting.
Yeah, it's fascinating, actually. I mean, indeed. We didn't talk about gold. Gold has been sort of fairly volatile, but maybe for another day, or if you want to talk about it, then
When I start about gold, I never stop again.
yeah, this is a bigger story and quite complex, but yeah, I mean, I think that's a
Oh,
topic for another
maybe
day.
one thing. The first time I heard that yesterday in a podcast, and I thought that's interesting, because there's always this. Oh, why haven't they audited Fort Knox for years and years and years? Is the gold really there? And I think it was the podcast of the Lotus Eaters, and the guy said maybe they're afraid there's more gold. And I thought, how does he mean that? And he said, if America invades a country, what's the first sites they secure? They don't go to the central bank and trying to get the paper money. They did that in Iraq. They immediately go into the vaults where the bullion is to have that secure. And then in Iraq example, they said, yeah, we use that bullion. First, we secured it, yeah, so that's not being squandered away. And then we take that and give it back to the legitimate government that they can rebuild their economy. And that's when I thought, you clever guy. How would they then give this money to them? In bullion? No, they give them dollars. So they couldn't end up with there's far more of the shiny stuff lying around in Fort Knox than people think.
Well, that's the hope. But just for, that's a
What
very
would
good
that mean for the
outcome.
market?
Scott Bessent, again, I keep referring to this interview with Bloomberg. I mean, this was a goldmine of information, but also lacking in some information. But he, in front of the camera, said, I say to the American people, and he looked at them in the eye, looked at the camera like this and said, I say to the American people, every year there's a report on the 30th of September. There was a report, I think he said, and, you know, it is audited, it is checked. So the comments that come from Trump Musk are there's no audit because there was a tweet which Musk then sort of, you know, got hold of course. So, you know, what is right? Again, this is the confusion. Bessent says every year there's a report, there's an audit, there's a check. Your money is there. And then everyone at Trump is running around saying, well, I'm going to go down there and check it as well because he says it's not been audited.
Because most of the guys have no idea how business actually works. There is something like you do an inventory once a year, but there's also permanent inventory. Yeah? Stuff goes in, stuff goes out. You keep it on the books all the time. That's what they most likely do in Fort Knox. And I don't buy into the conspiracy theories. But what I think, if I remember back when Corona hit the market, supply chains, yeah? And if this panic is, oh, I want physically gold, I need bullion in my coffer somewhere. The supply chains are stretched at the moment. Yeah, stuff is going from London to the United States. Singapore is already not exporting gold anymore. That doesn't mean the stuff isn't there. And there has always been far more paper than physical gold.
Yes.
But if the delivery chains suddenly do not take 3 days but 30 days, you might have a problem. Yeah, a problem if you're gold short in the market. So I'm still positive for the shiny stuff. I think we still have to do you know that from the trading floor. If there's a big number, every trader sitting behind their screen wants to do ring the bell. Yeah. So I was the guy who bought gold at 3,000. Yeah. And I sold it 2 points below and I lost some money, but I was the one.
You were the guy
who rang the bell. Yeah. And that's going to happen soon. I'm pretty sure.
I think so, but there's a lot of this sort of gold thing, just very quickly in 30 seconds of it is also Basel related. So as the banks have to comply and the capital rules force them effectively to have allocated gold, it's called, as opposed to unallocated gold, to the paper stuff, futures and all sorts of stuff.
Yep.
So the futures traders with all of these sort of open contracts, they want delivery. You never have delivery, but now they want delivery because, you know, their capital team is saying, well, that's going to cost us a fortune to have futures, so get the real stuff. So, and that's what's causing, you know, this sort of bottleneck. You know, people realizing that the paper gold market is 200 times bigger than the real gold market, and that the price has been suppressed all of these years. Maybe Team Trump doesn't need to revalue gold up. Maybe it just does it on its own accord.
Well, we said it here on this channel when it was trading $600-700 cheaper.
Yes.
There we go.
Absolutely.
So that is a nice final word.
I
Nick,
can't help it.
I thank you very much for your time again. I love these conversations. And again, as I said, I put the link in. Visit Nick's channel if you want the short and snappy about individual stocks. I watch it. I distribute it to everybody I know. And it's really value for no money because you don't charge for your YouTube videos.
No, absolutely not. And Harry does a lot of stuff as well. And so, you know, we want to show some what the Academy can do.
Thank you very much. Great final words. And I hope we see you, our treasured viewers, again, latest next month, when we see what is going to happen with all our favorite topics. Hope to see you soon. Bye-bye. If you liked it, like and share.
Yes, like and share. Thanks very much indeed.
Bye.
Bye-bye.